Jerome Powell. He's speaking at the New York Economic Club this hour. We're going to bring you those headlines as the Federal Reserve charts a course into new waters that many say will only lead to doom. Higher inflation, exploding financial bubbles, even wider income inequality. Here now to discuss two brilliant and passionate Fed watchers, Quill Intelligence CEO Danielle DiMartino Booth, along with Walser Wealth Management President Rebecca Walser. Hey, let's start with this CPI report this morning, right? Because that's the official report card on inflation. It was benign. They said there's no evidence of inflation. Danielle, seems to me, though, that these reports, they only embolden Powell and company to keep the printing press going, maybe for years to come. Your thoughts?
They certainly do. Charles, we have to keep in mind that Powell and company, as you say, they only look at the core CPI. And the core CPI, of course, only applies to central banking models. It certainly doesn't apply to our cost of living and the price pressures that we see. Somebody sitting here who buys a gallon of milk every other day, I can tell you for darn sure that I don't live on the core CPI. But you're right. The lower these prints are, the easier it is, the greater the license that the Fed has to say, we're going to hide behind these bad models. Again, these are not true metrics of the price pressures that American households are shouldering, but we're going to be able to hide behind them and say, we've got to keep printing money until we can get it up to this 2% arbitrary target. So, but Charles, as I've been saying for months, the Fed needs to be careful looking out into 2021 over the horizon about getting what they're asking for and getting those higher prints. There's a risk building for that.
All right, I want to get back to that as well, but also, listen, we know a lot of people are voicing concerns about inflation, but PIMCO, one of the biggest, most respected firms out there, saying it's not a big deal. Rebecca, they're saying that people are measuring this whole thing the wrong way, and they kind of agree with the Fed.
Yeah, it's a little surprising. They are out of step with BlackRock and JP Morgan, but I would just say that PIMCO is laying this at the feet of probably reminds me of Greenspan's irrational exuberance. In other words, we got so ahead of ourselves with the vaccine that we just all of a sudden priced in a back to normal recovery for 2021. And that's what we're seeing in the actual run up in the market. It's not the $6 trillion that we've pumped in the last 10 months and another $2 trillion on the way. So I have to say, no. I don't think so. We're not exact. It's true that as the vaccine came out, the market, just kind of stayed. We didn't come out. It was coming out. So it kind of, but we're not pricing in coronavirus. We haven't even reopened every state, Charles, yet. So the market is not saying that every state is going to be reopened this year. That's not what's happening.
Well, now I want to talk about one of the things that I think is happening here with the Powell Fed. And it really gets back also to last year when candidate Biden suggested that there should be an expanded role for the Federal Reserve, saying that they should, quote, aggressively target persistent racial gaps in jobs, wages, and wealth. Now, here's the thing. Can the Fed do this? And if so, what are the risks that will come, along, Danielle, with this new mandate? Because essentially what they're saying in the past, if there was 5% unemployment and you stripped out white unemployment, that would be significantly higher for other pockets of our society. So this time around, they're going to make sure that everyone has full employment. And that certainly means perhaps inflation at 2.5%, 3%.
Well, Charles, I mean, the way you just described the situation in and of itself it's inherently conflicting. Trying to get inflation up, trying to get households' cost of living up, that doesn't help them at all. And the Fed is limited, inherently limited, because they don't only have so many tools in their toolbox. Right now, what they've got is the ability to run the printing press in the background. The transmission mechanism, the way we see Fed policy manifest, is in the stock markets. It's in people taking risk, but who have access and who have ownership of homes and of stocks. That currently it is simply not. The Fed may be noble in its aims. I'm not trying to take away from that or discount that. But right now, the Fed does not have the tools to address inequality, and the risk is that they're going to end up inflating yet another asset bubble.
I've got breaking news from this Powell thing at the New York Economic Club. One thing he's saying is that the real rate of unemployment in this country is not 6.3% that's being reported. It's more like 10%. Again, reason for the Fed to keep the pedal to the metal when it comes to the printing press. But Rebecca, what I'm wondering is, what do you make of this notion that many have sort of given up on the ability of capitalism, American-style capitalism, to create these opportunities, to create upward mobility, instead of it being orchestrated by all this federal government spending and all this Fed money printing?
Charles, I want to be extremely clear on this because we always try to get fast answers in and just get it done so fast. I got to just tell you and the audience, this is the hill to die on. This is the beginning of the federal government starting to say that we cannot any longer graduate with an education and get a good job, that there is not a fair market, and that they must help us. They must help us get a job. They must help us get equality. They must help us in every way, that healthcare is a right, housing is a right. We have to decide as a country, are we going to go the way of communism and socialism, communism, which is government ownership, no more private enterprise, or are we going to be America, which is a capitalistic country? Which way are we going? This hybrid method of stimulation, but yet capitalism, but then regulation and government. And now you can see with Biden's sentiments exactly what you said. We must target persistent racial gaps in jobs, wages, and wealth. That is the government and the monetary supply with the central bank, Federal Reserve, taking control of the freedom, economic freedom in this country. And this is a big change. And we have got to, this is the hill to die on economically.
I love this
power
pairing,
to you,
and I wish we had more time.
Seriously, power to you.
You both are so powerful. I wish we had more time. We're going to get back and talk about this some more, but that's all the time I have allotted for right now. Danielle, Rebecca, thank you both very much. Really appreciate it.